3 common misconceptions about capital gains in property investment. Hello everyone, it's just Ryan here. Today we're going to dispel the 3 common misconceptions about capital gains. Let's go! Number 1, capital gains are slow. It is common to think that a 4 to 5% yearly increase in property value is a slow way to build wealth. After all, fixed deposits here in Singapore are already inching towards 3 to 4% without risk. But here's where most are missing the point. With responsible leverage, you can achieve much more. In New Zealand, if you undertake a 70% loan and a 30% down payment, know that every 1% property price increase will become a 3.3% boost on your ROI. Now imagine with me, putting down a $210,000 as a 30% deposit for a $700,000 property. Now, if the same property appreciates to $900,000 in just say 5 years, using a 5% per year annual growth rate, those $200,000 in capital gains will mean a near 100% ROI on your investment capital. You might be thinking, wait, but there is the cost of interest from the loan. Well, you're right, but that's when the rental income is there to help you to offset against it. Now, capital gains can fuel your wealth building by doing it safely and passively and together with sensible leveraging. Number 2, capital gains are speculative and risky. Now, some folks view property price growth as an unpredictable gamble. But here's the real deal. Property prices tend to grow steadily and consistently over time. This tried and tested asset class possesses an evergreen utility. Now, sure, it can be risky, especially if you jump in blindly without investing based on a proven framework for growth. By investing wisely and choosing the right locations and focusing on the key fundamentals and holding the property for a decent time frame, you can significantly enhance the odds of riding a wave of strong capital growth and smoothing out any short-term price movements. Number 3, capital gains are not a reliable source of income. You might think rental income comes in regularly, but capital gains only appear when I sell. Not reliable at all. But here's a way to look at it. Yes, capital gains might not arrive instantly, and moreover, its value is locked in the housing equity itself. However, if you can look at the bigger picture, the future does look bright. And here's why. Now, properties in the right growth areas, coupled with an ever-increasing property inflation, population growth and the stimulus of money printing all work in favor of property prices going up steadily in the long run. And history has proven that repeatedly. Now, our cup of coffee has gone up from $1 to $5 today due to inflation, as the cost of business such as rental costs has gone up. And rental costs has gone up because property valuation has gone up as well, as a reflection of moderating the median yield in the market. And here's a twist for you. Did you know that in the early days, the property market was simply created by the central banks to boost mortgage loans and interest earnings? Now, they needed a property market to thrive, and so it's in their interest to keep it going. Think about it. So there you have it. Capital gains are not slow, risky, or unreliable. In fact, they are a potent source of wealth, ready to transform our financial future. If you are keen to know how the New Zealand market could potentially provide you an avenue to diversify and scale your real estate wealth, feel free to reach out to me with a private message. If you have found this video useful, do remember to smash the like button and share this video. And do remember to follow me for more property insights.